Jessica, walk me through what an ESG investment actually is.
Sure. So at Calvert, we have a three-part process for thinking about how we review companies from an ESG perspective. Our research process is guided by our Calvert Principles for Responsible Investment and the concept of financial materiality. First, we look to situate companies within their peer group and look at how companies are managing their long-term structural financially material, environmental, social, governance risks and opportunities. Next, we look at their products and services they're providing and whether those are having a net benefit to the environment, to the communities they serve and their customers or not. And then we look at, finally, circumstantial score, how they are actually managing their ESG risks through daily monitoring of circumstantial events, news events, regulatory filings, things of that nature.
Erika, is that how you look at it?
Pretty much. I mean, we would argue that you simply can't make a fully informed investment decision without looking at the most material ESG factors. You can't. I would argue, though, that we have to go beyond some of the data because the quality of the data is not what we'd like it to be and is not as consistent as we'd like it to be. So going beyond the data, then you really start to look at the nuanced issues, the complexity of the problems we're trying to address. And like Hank Paulson says, we are talking about trillions and trillions, and this is not just for climate action, it's for education and healthcare, infrastructure, everything you can think of.
What's interesting is that assets tied to these kind of strategies have really ballooned. I mean, I remember trying to get a green bond segment on air like 4 years ago, and no one would even talk to me about it at the end of the day, except for you. How do you see this growing? And how does that hurt or help you?
The reality is it helps. Every little bit helps. That said, we have definitional problems. Back a few years ago when we spoke, nobody really knew what green bonds were. Now you have the opposite problem that everyone thinks they're doing ESG or sustainability or impact or green bonds. And so we've got a little problem with really identifying, what's real and what is marketing or greenwashing.
So, Erika, when you manage a business, if you can't measure, you can't manage it. We're told that in order to make an intelligent investment decision, you need to know about ESG. But is there any standardized way of evaluating this, of measuring it? We don't have FASB. We don't have GAAP.
Well, what we do have is the Global Reporting Initiative, which was the first initiative about disclosures and standards. Now, in the U.S., we have the SASB, the Sustainability Accounting Standards Board. The issue there is disclosure. We're trying to get better corporate disclosure, consistent data that we can rely on and make projections based upon. We don't have the quality of data that we need yet, which is problematic.
And the question then becomes, who are the ESG investors, Jessica? I mean, if I think of it, I think it's, millennials, and we're going to see a big shift into that. Is it just millennials, Jessica, or is that theme spreading out to other generations as well?
Absolutely not. It's not just millennials or ultra-high net worth. We're really seeing an interest across the spectrum in this. As a matter of fact, we have a survey coming out of financial advisors that's saying advisors are saying over 80% of their clients across the spectrum are asking them about responsible investment products. And the same survey for us identified over 80% of financial advisors are saying that strong ESG research is critical to positive outcomes for investors.
Yeah, and that brings up the question, too, and I ask this a lot for ESG investors, do you look at it as, here's a company that I really like, now let's see what they do on the ESG level? Or do you filter it through an ESG lens first and then say do like a bottom-up analysis?
So we really look to situate companies within their peer group and identify what are the material environmental and social risks to companies. Like, they will be different. In the financial sector, we may put a very strong emphasis on governance characteristics and on product safety, product suitability, whereas in a sector like transportation, environmental risks will carry much greater weight. Are they managing appropriately to the transition to a low-carbon economy?
Erika, what about you on your front?
Well, I entirely agree with Jessica. What I would add is that in the E and the S and the G, governance is first among equals. So if you don't get the governance right, that's usually problematic. That's equivalent to what Hank Paulson talks about with infrastructure. Governance is infrastructure. And so if you're getting the governance right, it implies that you're looking at the material, environmental, and social issues.
What's returns? How do the returns differ than if you don't do an ESG lens?
Well, basically what we know is that the empirical evidence, and this is dozens or even hundreds of studies, show that you don't do any worse by looking at ESG factors. Why would you not want more information rather than less? There are studies that would show that you can outperform over the long run, or there's less volatility over the long run. But we do have to look at both risk and opportunity.